Five, four, three, two.
Hello and welcome to BQ Prime's earnings conversations with Patanjali Foods. I have with me Mr. Sanjeev Asthana, the company's CEO, to decode the first quarter results and also walk us through the outlook on demand margins and more. Thank you so much, Mr. Asthana, for joining in.
Thanks for being here.
In the first quarter, we have seen Patanjali Foods reported a 64% decline in net profit, while revenues rose about 8%. Operating profit also fell about 57% to 169 crore, and margins contracted sharply to 2% against 5.4%. Mr. Asthana, we understand that the decline in cooking oil prices and the resultant high cost of inventory weighed on profitability in Q1. But are we seeing an improvement yet, and when do you expect things to normalize?
Sisa, I'll take a minute to explain, the results of this quarter and what exactly happened. So, two events sort of are critical to note. One, that on the FMCG businesses, we've continued to grow quite well. Our margins are 18.5% across the segments, whether it's the food segment or the biscuit segment, nutraceuticals and soya proteins. On the Nutrela side, our growth rate has been very good, very healthy, both in terms of the volumes that we're getting and the margins that we're attaining. And that is one positive sort of takeaway I'll leave for you. The second business is our edible oil business. And there we had a sharp contraction for two reasons. One is that when we import the oils, we do hedging on the global exchanges, both at Chicago as well as PMD in Malaysia. This time between April and May, the markets were reacting normally. In the month of June, there was a sharp sort of upward spike in the global futures prices. And for no reason linked to India at all. So the shorts that we had on the hedges that we had placed on the international exchanges, that moved adverse almost more than 10%. And the domestic prices did not react at all in line with that. So with the result that we had to take losses on the hedges internationally, both in terms of book losses as well as the mark-to-market losses. And the domestic prices did not react. So because of which you saw the contraction. And the way we explain the business is that you have to look at a longer term perspective on the business, which means over 4 quarters rather than quarter. So hopefully not only will this stabilize, we should be pretty much on course to meet our objectives for the year.
All right. So on the margin front for the food and FMCG business, you did mention about 18.5% growth. So do you think this is sustainable, and what kind of margins do you expect over the long term?
So we have two sort of pointers that we've already said, that FMCG margins should be between 16 to 18%. We've done better than that. So I'm reasonably confident that we should be pretty much in that ballpark range. 18% plus is what we are hoping that we'll do for the year. And there's a lot of confidence that we have that we should be able to beat that. Our idea is that we want the quality of profits to sustain themselves and improve. And that's how we're going to work going forward.
Right. So Patanjali Foods has been also steadily ramping up its premium portfolio. We have recently seen the launch of the sports nutrition-based products. Then you also have got millet-based products in the biscuit category. So could you shed some light on your premiumization strategy going forward, and as well as what categories you would be looking at, any other new categories, and what kind of revenues do you expect the premium categories to contribute to your overall sales?
Sure. So we did a launch, in last sort of 8 weeks back on 3 distinct categories that we worked on. One was the sports nutrition, which was completely revamped. Not only we did on the branding side, we changed the packaging. We brought in new sort of flavors and variants to the sports nutrition, which is at a premium level. So that was one launch that we did. We are quite confident that we will make it happen, and I'll come in a minute to what we're planning in the future. The second launch that we did was on the biscuits portfolio, where we brought in 3 new sort of products. 2 were millet-based products. One was the ragi, and the second was 7 grains. Both are excellent response we have received in the marketplace. They were test marketed earlier. And of course, third one was digestives. So all 3 good products. Biscuits, we are continuously working and striving to come out with a range of cookies, much more healthier option. We're working on coming out with newer biscuit range. The third one was in the Nutella, where we came out with Max Nuts, which was in the dry fruit category, where we in the first round we've launched almonds, pistachios, and walnuts, and we're going to expand that range. Where we're looking at flavorings, we're looking at coatings, we're looking at a solid partnership that we have with the global players. That's going on. And one more launch that we did was Ragi Bites that we had under the Nutella brand, which are basically both cereals as well as just as a snacking category. This again, we are seeing repeat orders of more than 15%. So it is going apace. Going forward, the plan is that we continue sort of premiumize our product range, and the longer term target is that at least 10 to 15% sales should start to come from the premium category.
Okay, so what is the share of your rural and urban markets, and also what is your take on the rural economy? Like, how is it shaping up? There are concerns about food inflation rates spiking again. So, do you expect that to impact the rural recovery to some extent?
So three parts to your question. One is that share in the marketplace is 60-40. 60 we still sell in urban areas and 40% we sell in the rural areas. In terms of the growth momentum in the rural markets, I see that demand had started to pick up. Monsoons were very good in July. August, we are seeing some slippage in terms of the monsoon progress. So I don't anticipate any serious slippage on the demand side in the rural areas, but we'll have to watch this space carefully. And my sense is that on the inflation front, it does hurt the consumers, but the government is working quite actively in terms of bringing down the inflation. There are a lot of control measures that are being placed, and hopefully, I think it will not have any serious dent, because there are a lot of support mechanisms for the rural markets and the consumers in general. And we believe that the demand sort of growth on the green shoots of growth that we saw, I think will continue the path.
Okay, and what is the progress on palm oil plantations, Mr. Asthana? If you can just throw some light on that, because we know that India is looking to reduce its dependence on imports and become not just self-sufficient, but also grow its exports. So, you being the largest, player here, so what are your thoughts on this?
So very good progress at multiple levels. For example, we've almost set up 11 nurseries in last 6 months. 4 more are our work on the setting up the mill at Arunachal Pradesh at Pasighat is going on full steam. So the first mill that we're setting up in Northeast. The land for the second one has been acquired in Assam. We've signed the MOU with the government of Telangana. We've had an expansion on the production capacity at Ambapuram, one of our locations. And clearly the FFB arrivals will continue to increase. So there's a serious amount of both investment and the groundwork that the company is doing. And we're reasonably hopeful that, we should be able to sort of not only keep a commitment to the timelines, but also the execution will be world class. So, both in terms of access to the sprouts that we have, in terms of, setting up the nurseries, engaging with the farmers. We're setting up 150 farmer producer organizations, which will have a membership base of 100,000 more farmers will get added to that. So there's a lot of serious work which is going on, and we are reasonably confident of, on the oil palm execution front in terms of taking it forward.
Okay, and what kind of capex and capacity addition are you looking at?
So capacity addition would be progressive. So I think it would be wrong to sort of talk about that. As I mentioned, that in fullness of time, we will have close to about almost nearly 10 lakh tons of palm oil that will get produced. But that is down the line. It's quite a few years away. Capex is our requirement right now is quite minimal. In the oil business, we will require about $150 million of spend that we'll have in year 4 and 5. So that is also sometime down. So right now we don't have any major capex requirements on the oil palm front, other than setting up, the nurseries and acquisition of land, etc. will happen. But mostly it's on or otherwise. So it's not large capex outlay that we have.
Okay, and as far as the food and FMCG business is concerned, would you be investing there because you are introducing new sets of products and categories? So
we don't need to say, so our capacities are abundant. So, for example, the food side, we still have substantial headway to sort of go. So we don't
Okay.
believe that we need any fresh capacities, capex. Edible oil, we still have more than 40% capacity available for expansion. So in a way, we're in a very good sweet spot that there are no large capex requirements to fund the growth, and we are
All
pretty
right.
much supposed to sort of meet our business requirement with very little capex spend.
Okay, got it. Lastly, I would like to know what kind of targets have you set for yourself in terms of revenue, profitability, as well as margins, given that there are no more pressures on costs?
So margin profile, as I mentioned, food business we'd like to maintain at 18% plus of EBITDA. The edible oil business, our margin plans are very clear that we are expecting between 2 and 4% of EBITDA margin that we will make. Wind power
Okay.
that we have pretty much consistent annuity business. So net overall for the clearly keeping north of 5.5% is a target that we have for the company. And we're reasonably confident that over next 3 quarters, you will witness the growth that we are seeing, and we should be able to get there.
Okay, and in terms of your revenue?
Revenue is two sides. So FMCG is more relevant because we clearly are looking at this year of 7,000 crores of top line.
Okay.
And
Okay.
in terms of, but on the edible oil side, I must tell you that our volume growth is almost 30% plus right now, which will taper off to closer to 10%. But there we don't take revenue as a number because the commodity nature of the supply side that we have. So the market may by 50,000 rupees a ton or 20,000 rupees a ton, the revenues will jump up to that extent. So broadly, we don't take the revenue target, but we should be pretty much certainly above last year's numbers, and certainly maybe significantly more if the markets were tending to move higher.
All right. Okay, Mr. Asthana, thank you so much for your time. It was a pleasure talking to you.
Thank you so much.